Hello and welcome back to this course on usually. In this module, we have discussed rooms, revenue, and expenses so far. So even after we have covered the room revenue and expenses, we also need to cover we also need to see how they are impact into the profit and loss statement, which are variable, how to read them and analyze those expenses. As you have seen in the previous definitions on room revenue section, the room revenue is divided into transient rooms, permanent rooms, other income, and allowance. So here, the most important thing which you have to see as an analyzer or as a reviewer is what is the segmentation, what is the percentage of revenue that you have been getting in terms of proportion of revenue from your transient income, other income, and allowances, especially the allowances. So this column here will show the proportion of the revenue which is compared to the total revenue. So we can compare this with the budget and the previous years to see if there is any significant discrepancy in allowances other as a part of total revenue. Are the allowances ratio is more than the usual or more than the budget? How about the other income? Are we able to maximize our opportunities of early check-in, late checkout, early extra bed charges, and upselling? What is the ratio of permanent rooms to transient rooms? Then, but this information is not sufficient to analyze the revenue in details. If you remember, in the room departments, there were certain operating matrices that we used to discuss. For example, revenue by market segment. So you would see in transient what are the revenue, where the revenue is coming from, what market segment is it coming from? FITs, is it coming from groups? Even FITs, is it coming from the businesses, coming from the wholesale agent, coming from the direct retail business, coming from packages or meetings, or where the business is coming from in terms of both room nights and the average rate, because you are not selling the room to everybody at the same price. So you may also want to see what is the revenue segment. We have already discussed that in the previous version, how you are going to see that. So the key here is to compare with the budget and the previous year. Once you know a certain revenue market segment is down or is higher, the next thing you may want to see is the guest nationality. What are the booking source? What has been the lead period? What is there any cancellations? Are there what are the source of booking? Which country of residence the guest has been coming from in the past and in the current time? So that you can know where the shortfall is coming from. So just only looking at the P&L will not help you much. You may have to go into details into the sub reports which are supporting these P&L lines. Once you have understood the revenue segmentation, the next part is the profit and loss statement. This the format that you see on the screen is slightly different from the usually prescribed, because usually prescribe the total labor cost as a total amount shown into the profit and loss statement. However, for the sake of simplicity and make it easier to read the expenses, I have done is what I have taken only the total labor cost into the main P&L, and then there is a breakdown of this labor cost in the same format as usually, so that we can understand the what is the management labor cost, front office, housekeeping, service, miscellaneous. Then you have service charge distribution, bonus and incentives, vacation pay, recovery salary, miscellaneous. Then you have payroll related expenses, and you have casual and contract labor. Contract labor usually is included into the labor cost nowadays. So some companies are following casual labor and contract labor into the labor. However, casual labor will be coming here. The contract labor will not come here. Contract labor usually will go to the salary and wages if it's processed through the payroll system, or if it's not processed through the payroll system, but it's outsourced to a third party, then it will go into the P&L line as contract services. So there is a difference between the two lines. However, some hotels may follow may want to see what is the total money spending on the on the total labor cost. So they may want to split the labor cost and the contract services into the material and the contract. The contract will come into the labor cost here, so that they can see what is what is the FIT, what is the total labor that they are paying per person. So usually you will have a term called FTE here, full-time equivalent employees. Then that way that may help you to understand how many people's hotel is using compared to the last year's or compared to the budget. You may want to understand the percentage of breakdown. This percentage is not to the percentage to the revenue. This percentage is the proportion of the total labor cost within the labor cost. So how much is the management, how much is the salary and wages compared to the total. Sometimes hotel may be spending a lot more money on the payroll related expenses, on the benefits, on the employee, on the transportation, on the casual, on the contract. So you may wanna understand where the most of the money is being spent. You may also compare this labor cost by per available room, or by per, you cannot compare it by occupied room except the casual labor, which is primarily variable. So you have to understand what expenses are variable and what expenses are fixed. Most of the labor cost is fixed. However, certain costs like casual labor or the benefits, employee benefits, meals, transportation, are usually partly semi fixed. They may depend on the business level, not really on the not really the fixed expenses. Then after the labor cost, usually the next thing we normally have to analyze in the P&L is the expenses. Now there are two ways to analyze the expenses. One way to analyze the expense is to understand per occupied room. What is, if the expense is a variable and we know that more rooms will entice us to have more expenses. For example, cleaning supplies. So if you have more room occupied, means you have to do more cleaning. But cleaning supplies includes certain part of public area as well, which is fixed. Even though hotel may not have a guest, you still need to clean the bathroom, you still need to clean the lobby, you still need to clean the public areas, and hence you may have to spend the money there. So what portion is fixed, what portion is variable? So normally it's not split out in the P&L here. Usually you have to go back to the general ledger and see how much money is being spent on the fixed portions, how much money is being spent on the variable portions. The housekeeping department may have a breakdown how much they are spending on the public area, how much they are spending on the rooms, so that you can compare the fixed portion is really fixed or is it increasing. The revenue, the variable portion, which is mostly spent on the occupied rooms, is it per if you compare it, divide by the occupied rooms in this month budget and last year, per occupied room, are we spending the similar money or we are spending too much? So this way you will be able to understand what is the expense. So most of the expenses here you will have to split them, go into the general ledger, go into the source documents, go into the departmental expenses which are maintained by the department, and see, are they variable, are they or are they fixed? If they are fixed, are they increasing or decreasing? If they are variable, if the per occupied room cost, is it similar or not similar? Usually the departments or the people, the analyzers usually make a mistake by dividing the total expenses and see what is the per occupied room. Then but they forget that some expenses can be variable, can be fixed as well, so they may not change based on the business level. So the key here is to go into the details of each and every expense. You can choose the major expenses based on the percentage, as a percentage to revenue. If the you can set up the threshold how much percent, if it's a significant percentage of to the revenue, then you may want to go into deeper details. If it's only a very small amount like 0.1%, 0.2%, 0.3%, you may not want to spend too much time there. You may want to spend time where you have most of the expenses, i.e. follow 80-20 rule. Means the 20% of the expense items which is contributing to 80% of the total expense. So most of the expenses here you will be able to analyze. However, I will give you a brief which expenses are usually fixed. But again, it will depend on the hotel. Certain hotels will have them fixed because they may contract out. For example, cleaning services, cleaning supplies. You may have a contract, so it may not be the company may be responsible for providing all the cleaning materials in lieu of a fixed payment. So in that case, it will not be variable, it will all be fixed. So this way you may have to split out the expenses and understand how the contracting is done, what is the business model of the hotel. Is it outsourcing or doing self, right? Especially when you are comparing the cost with other hotels. If let's say you are also outsourcing it, your labor cost may be low, but your other operating expenses will be higher. If you are doing it yourself, your operating expense will be low, however your labor cost will be higher. So cluster services, as we already discussed, is usually a charge from the cluster office. It does not depend on the revenue unless it's allocated based on revenue. But even in that case, the total allocation of the expenses will not be in the hotel's control. Commission expenses depends on the revenue. Group depends on the revenue. Complimentary food and beverage services depend on the number of guests, not based on the revenue, but more on the number of guests in the hotel. Not even based on the number of occupied rooms, because the occupied, if the let's say there is a group coming into the hotel which has dual occupancy or which has triple occupancy, your complimentary F&B expenses will blow up, right? But the total number of occupied room will remain the same. So when you are comparing it per occupied room, it may not be giving you the right sense, because what has happened actually is different. So you may need to understand what are the drivers of these expenses. In-room media entertainment depends on how the hotel has made the arrangement. If it's a fixed charge, maybe it's a per occupied room charge, or whatever is the way. So you have to understand that first before you are going to analyze it. Complimentary services and gifts depends on the business. Contract services usually are fixed. Corporate office is usually not in the hotel's control. To make it easier, usually you can split out the into subheadings which are variable expenses. You can put them at the same in the same subheading. Fixed expenses you can put in the same heading. Expenses which are not in the control of the hotel itself may be put into the separate heading, so that it's easier for the user to read and understand how they are being analyzed. Then you have decorations. Decorations mostly is the public area, or sometimes in the room, small decorations, but usually you don't have a lot of decoration in the room. You mostly have decorations in the public area, so which is going to be fixed. Dues and subscriptions going to be fixed. Entertainment usually will depend on the business. Equipment rental usually is fixed. Then you have guest relocation, depend on the business. Guest supplies, guest transportation depend on the business, unless there is a special contract with another limousine company, and then you are paying them a fixed amount of money regardless of the guest. It can happen. In that case, it will be fixed. So you have to understand how the business is being conducted. Then you have laundry and dry cleaning. You have which is usually fixed expense, because it's include only the linen and also the laundry of the uniforms, which is going to be fixed. Licenses usually are fixed unless the license includes a percentage to revenue. So in that case, it will be variable. Then you have linens, which are ad hoc, depending on the accounting policy. Maybe the company has a policy that whatever linens you are buying, it will be amortized in 2 year, 3 year, then it will be a fixed expense. If it depends on only when it's damaged, then only you will be replacing the fixed linens, then it will become a fixed expense or as a ad hoc expense. Operating supplies usually depends on the business. Postage depends on the business. Printing and stationery usually is depending on the business. Reservations mostly depend on the business, so variable expenses. Royalty fee usually are a percentage of the revenue, so it's gonna be mostly the variable cost. Training, travel is usually fixed. Uniform fixed, uniform laundry is fixed. So these are the expenses. So which whatever are fixed, you may need to look at the breakdown and see if there is an increase in the previous year, not as a percentage to revenue, not as a percentage to the per occupied room, but more as a absolute value. And if the revenue drops significantly, then you may need to question, can we stop it? Can we influence the even the fixed cost? If yes, then have we done that or not, right? So in order to understand the profitability, you have to understand each and every aspect of how the business is being carried out, revenue and also the expenses. In order to understand certain key statistics, we normally the hotels would put actual room sold, paid occupancy, average daily rate into the P&L itself, so that when you are looking at the expenses, you can refer back how many rooms are sold and calculate per occupied room. Some good hotels will calculate the per occupied room automatically and attach uh, as a separate attachment. It's also part of the usually where you are going to see the per occupied room cost as a part of usually format. So usually there is an annexure to the main P&L which is calculating the per occupied room cost. So this is how we normally read the profit and loss statement. And then we can, if you want to understand what are the other report that we use in the revenue recognition or how we analyze the profit and loss statement in more details, you can take my course on how to analyze room division and room division profit and loss statements. Thank you very much.